All right, let's do this. Metals, markets, and money. This is for March 20th, 2020. This is a pre-market update. Let's take a quick look at gold. We had a significant move in gold. It went up. It's up over 2% right now, of about over $30. 1503 it's sitting at. I'm a little bit biased upwards on this. I'm a little bullish on gold, considering the moves it was making prior to these margin calls in the market and the big push down that got that it saw. Silver actually catching a bid this morning. Silver is up significantly. I believe it was right around 12, so it's probably up like 63 cents or so. It's been as high as, I believe, $13. So silver is putting on a little bit of a move right now. It was probably in a very oversold condition. Also, I do know that from a lot of the stuff I'm watching that the physical markets in gold and silver are strained right now. I don't think they're just going to come back and start supplying all this silver and gold at the prices that you see right now. I think that's a little bit wishful thinking on the part of people who want this stuff. But plan accordingly if you want these metals. Let's take a look at the markets. Markets up significantly. We're up over 3%, 640 points. Again, it looks like a pretty nice bottom being put into the market. Now, again, when we take a look at some of the news here in a second, might have a difficult time buying into the madness being over. But, who knows? It could be. Let's take a quick peek at the markets. Quickly, we're going to take a look at oil real quick. First, it's up to 26.73, significantly up from its bottoms at 19 handle a couple days ago. So that's pretty significant bounce. Again, it was probably a very oversold condition. I would expect this to probably bounce up somewhere near 30 before it gets sold again. I expect oil to bounce between 25 and 30. Under 25, people be buying the dip. Above 30, people be selling the move up. Equities across the planet. We've got the Dow's up 4%, as we just talked about. S&P, and again, these are going to be different than other charts. Everyone has a different start and end time for the markets on some of these sites. That's why you'll see different numbers. In some places, the market will end at 5 p.m. Eastern Standard Time, and other places, it's 8 or 9 or whatever that is. That's what you're seeing a reflection of when you see different reports on the percentages that the market's up or down. S&P is up, NASDAQ is up, Bitcoin is up. Bitcoin's had a pretty strong move past couple of days. DAX is up, Nikkei's up, Shanghai up, UK, Hong Kong, ASX 200 is the only one that's down a little bit, Nifty's up, and of course gold is up, and UK oil. So we're going to go off of that. So we know the market equities are doing really good today. Why are the equities doing good today? Dollar came down. So I'm still on the monthly that I was on yesterday because I want to see when it goes over 103.82. That's going to be a pretty big deal. I think it's going to shoot up to this trend line, which is 109. It may do a quick follow through, but I suspect that might be somewhere in here might be the tip of the dollar before it starts to recede. So could be some dollar weakness helping the metals up, helping the equities up. Let's take a look at the rates here. The 10-year is down. Yeah, it just doesn't like this page. 10 years down 15 basis points. So again, you're seeing some strength in the treasuries. The yield curve is really starting to look like a yield curve, though. Look at these, the 2 month, or I'm sorry, what is this? The 1 year is at 0.168%. So, when you think about this yield curve, the way I like to see it, or the way I like to think about it is, how long would you give your money to someone for? Okay, in other words, would you give your money to someone for 10 years to collect, or I'm sorry, for 30 years to collect 1.788% interest? Or would you rather give it to them for 10 years to collect 1.158% interest? Okay. Me personally, I would go with the 10-year. Actually, I probably, with these rates, the way they're sitting right now, I don't understand why anyone would buy treasuries unless you absolutely had to have them as an asset for collateral. Otherwise, I would be sitting on the sideline waiting for the dust to settle, personally. But I don't have that kind of money anyway, so it doesn't matter. Let's go into some news real quick. See what's going on here. A lot of people think there's a lot more pain coming in the equities. You know, all the stuff in the news that's going on has put a lot of panic into the markets. That panic's not going to go away overnight. I don't think there's a single piece of news that's going to take that away. And besides that, none of the news has really turned around on all the stuff causing this. So let's take another quick look at some more news. Bank of America, bond market is broken. This is what you really, really need to keep an eye on. This, as I've said before, this is going to be a credit crisis. It is credit that caused this, all this speculation in the market, and it will be credit that brings it back down. So I'm still looking for some significant turmoil in the bond market. I don't think that the real turmoil has come yet. I don't think you'll know that turmoil is really here in the bond market until rates actually start going up, and the Fed is not able to control rates as they as they go up. That will be a sign that the real credit crisis is here. U.S. airlines to burn through $40 billion a year. Yeah, that's a no-brainer. All these companies are going to start burning through cash that they don't have. Cash that the government's given them. Again, like I said, take a look. This is Friday, so take a look at all the news this week and all the promises that have been going out, and you will see probably, I would say, at least $3 trillion in guaranteed money going out to the public and the corporations here in the U.S. and even foreign governments. The Fed has given them credit lines to help with the dollar shortage that's going on. So, if you look at the promises that are going out and the amount of money, I mean, they're starting to enter the drunken sailor category here, if not passed out sailor, and people are just taking his wallet. So keep an eye on that. That's when the aha moment comes, when they lose control of rates, and then you're going to see what this stuff can really do. But for now, keep an eye on the metals, keep an eye on the rates, keep an eye on the markets, keep an eye on all this stuff. If you are able to make any decisions for yourself, or consult with a financial advisor to see what you can do with your money, now would be a prudent time to do that. Kind of hard to catch a falling knife, and it would have been hard to obviously short all this stuff at the 3 or 4 weeks ago when it all started. But doesn't mean you can't do something now to protect yourself. So if you have the wherewithal, you might want to take a look into that. Again, thanks for watching. New channel. Subscribe, share, like, all that stuff would be appreciated. Take care, and have a great weekend.